Hello folks, it is Tuesday, June 27th. It's about noon on the East Coast of the United States. In this video, we're going to be looking at stocks and stock sentiment in particular. So Bob Moriarty on his website, 321 Gold, he posted a link recently to this article. And in this article, he talks about DSI, which stands for Daily Sentiment Indicator, or Index, Daily Sentiment Index, and this is Jake Bernstein. So he publishes the DSI, charged $1,900 a year for it. It's good information. Is it worth that? Not unless you're doing a lot of trading. And so anyway, in this article, Bob is pointing out that the NASDAQ and the S&P 500 are both over 90 on the DSI. And basically DSI, you can also think of it as indicating overbought and oversold. Well, we can get similar information without paying $1,900 a year. In this chart, what we're looking at in the top frame, this is S&P 500 stocks above their 20-day moving average. And then in the lower frame, this is S&P 500. Both charts are in the weekly time frame. And so if we just look at lows in this, I'm going to refer to it as an indicator. So if we look at the lows in this indicator, they coincide with pretty good times to buy. So, here we are, this is back in September of 22, and we've got a low in the indicator. So, what was that? Almost no stocks above their 20-day moving averages. And in hindsight, that was a pretty good time to be buying. When this indicator gets up towards its high level, and of course high and low is relative, I picked anything above 80 as high, anything below about 16 or so as being low. When the indicator gets up into the high range, that's a pretty good time to be selling, or at least thinking about selling. And actually, if you spend some time looking at this, what you'll notice, what I noticed, is that it's a better indicator for buying than it is for selling. So we can see, here we are up into the high range, but stocks continued moving higher for several weeks. And so, if you sold here, you still did good. You made 10, 15% on your money in just a few weeks, which, that's a darn good return. But you missed out on some of this continuation of this rally. And so one strategy you might employ to use this in your trading, short-term swing trading, is that you buy when the indicator is low, and then you use a trailing stop. And as the indicator gets up into the high range, you might even tighten your stop some and just wait for the market to take you out. And so, maybe you get taken out up here somewhere instead of intentionally selling down here. And we can see again, so there's another potential buy point, and we can see stocks were doing a dip and then they moved back up. Here's a good example of, back at the high range, but stocks weren't done moving higher, as we can see down here. And so, the indicator hits the high range, we put a trailing stop in place, and then just wait for the market to take us out. Here again, another buy opportunity. This is where we're at currently. So March of, that's early March of this year would have been a potential buy opportunity. Here's the indicator going high in late March, but obviously the market has continued higher since then. And so at this point, we could put a trailing stop in place and just let the market take us out whenever it does. And if we left our trailing stop fairly loose, we'd still be in the market. And so anyway, just something to think about. Another way of looking at sentiment or overbought, oversold we can do similar things. So this is in the upper frame, S&P 500 stocks above the 50-day moving average, and you can go through the same exercise. When the indicator's low, you might think about buying. Indicator goes high, that might be a sell opportunity. Same thing in the 200-day, stocks above their 200-day. If we look at this, here was a good buying opportunity. Here was a good opportunity. This is September of 22. And notice that currently we're about mid-range in this. If we had bought back here, we're not up to the high level of the indicator or the selling point. And so again, if we're sitting here with a trailing stop in this time frame, I've jumped up to monthly. So in the prior two, we're looking at weekly time frame. Here I'm looking at monthly. And if you wanted to, you could look at these indicators in the daily time frame, and you might try to get some more granularity to your strategy. Another sentiment indicator is VIX, volatility index. When this indicator goes high, which it's an indication of fear or anxiety in the markets when VIX is high, and of course high again is relative. And in this case, I've picked, that's about 32, 33 as the start of being high, and then 20 and down as being low. So buy when VIX is high, fear in the market. I think it was Lord Rothschild who said, buy when there's blood in the streets. And so when VIX is high, that's when blood is in the streets, and you might be thinking about buying. And then when VIX gets low, investors and traders have become complacent. Fear and anxiety have left the market. Well, typically that's a good time to be thinking about selling, or at least tightening your stops if you trade with stops. And so that's where we're at currently on the VIX. Is we're in a low, very complacent markets based on VIX. And as overbought as the markets are, being complacent about your stock investments, probably not a good idea. Now, this is another article that was on Bob's site recently. You can see it dated June 22nd. And this author was sharing the idea that the crowded trade right now is tech stocks. We had NVIDIA and the AI, the artificial intelligence, that basically that's where the market is trading. We've gone from a broad rally down to a very narrow rally. We've only got a handful of stocks that are holding this market up currently, and a lot of them are in the tech sector. And so what this author is pointing out in this chart is that if you look at tech stocks relative to the broader market, relative to the S&P 500, tech stocks have not been this overbought since 2000, 1999, 2000, the dot-com bubble, Y2K bubble. And so in TradingView, that's the charts that we're looking at. It's TradingView. What I have available for tech sector that goes back to Y2K is XLK. And so it's an ETF or a fund. Yeah, tech fund. And so in this chart, we're looking at XLK versus the S&P 500, and we can see similar idea that the tech sector is currently very overbought in this particular vehicle, XLK. We're not back at the same level of the Y2K or dot-com bubble, but we're getting there. And so just another indication, not only that the markets are overbought, but the tech sector in particular is overbought. and almost as overbought as it was before the dot-com bubble popped. And so that's another something to tuck into your pipe and smoke it. Consider as you're pondering your investments in the stock markets. So let's look at some charts. I'm not going to spend a lot of time. We're just going to run through them. This is S&P 500 daily time frame. So we can see back in, that was the 16th. And so this coincides with the same time frame when Bob was pointing out that DSI was over 90 in the S&P 500. Well, stocks were up here pushing towards a high, and of course have pulled back in the last week and a half or so, all the way back to the 20-day moving average, and now we're getting a little bounce today. Notice that that level is coincident with a couple of layers of support. We've got this horizontal potential support level from this prior peak. We've got the 20-day moving average, of course, and we've got the median line of this Schiff pitchfork. So several layers of potential support there. But again, the markets are overbought, and we can see that here based on MACD. MACD is at the same level of overboughtness that stopped us back here, and so, based on MACD, the market is overbought. Currently in bull mode, both indicators above the zero level of the indicator, suggesting that the primary trend is to the upside. Notice that we got a new MACD sell signal in the last few trading sessions. Energy about mid-range. S&P 500 in the weekly time frame. MACD in bull mode, still on a buy signal. Energy very elevated, but again, overbought. Not necessarily overbought based on MACD in this time frame, but overbought relative to the moving averages. I mean, it's the reversion to the mean. Markets, doesn't matter which financial market you want to look at, price doesn't like to get very far away from its moving averages. And in this case, we've got the 10-week moving average. Price is overbought relative to that level. We've got a potential support level from this prior peak, same thing we were looking at in the daily time frame. And it appears that price is pulling back to that level and potentially finding support there. So Dow, this is the Dow in the daily time frame. One of the divergences or discrepancies that I see in the equity markets currently is the fact that the Dow is not participating in the current rally. That basically Dow is bumping sideways for months now, while the S&P 500 and the NASDAQ have moved higher. New sell signal in MACD, energy is low. So, bounce off of the 50-day moving average, playing with the 20-day moving average, but the Dow is just not participating to the same extent that the other indexes are. Bumped into resistance at this horizontal level, finding support on the 10-week moving average. Excuse me. MACD in bull mode. Let's keep rolling. This is NASDAQ in the daily time frame. One of the things I noticed as I was looking through these charts, in almost all cases, the markets and individual stocks and indexes are below their all-time highs. And so, the market peaked back here in early 2022, and we're still below that level. Now maybe we push up and make a new all-time high. That's not my expectation, but anything is possible. But in all these charts we're going to look at, and I'll point out the exceptions. There's only two, I think. We are below the prior highs. And so here in NASDAQ, daily time frame pushed up into resistance at this horizontal level from the prior peak, pulling back from that level. currently playing with support at the 20-day moving average. Overbought relative to the moving averages. Of course, the moving averages are in bullish alignment. 50-day is above the 200, 20 is above the 50. But if we look at the three collectively, price is overbought relative to the moving averages and overbought relative to MACD. And so this was similar to what we saw on the S&P 500. This level of overboughtness stopped us back here. This level of overboughtness stopped us back here, and we're at that level again. So, and pulling back from that level, we've got a new sell signal in MACD. Energy's about mid-range. MACD still in bull mode, so primary trend still upwards based on MACD, albeit the market is very overbought. NASDAQ in the weekly, same thing in MACD, running into the overbought level, going all the way back into 2020, bumping into resistance from this prior high, rolled over and headed lower, very overbought relative to the moving averages. Of course, energy remains high. MACD in bull mode, still on a buy signal, albeit very overbought. So let's look at some individual stocks. So we've got two stocks that we're looking at. There are probably more stocks at new all-time highs, but the stocks that are currently keeping the market elevated that are also at new all-time highs. Basically, we've got two. It's in NVIDIA. We're looking at it here in the weekly time frame. So big push higher. This was on everybody got excited about AI. Oh, AI is going to do this and AI is going to do that. Yeah, maybe. And so AI makes video cards that are very conducive for doing AI and for mining crypto. And so anyway, NVIDIA was pushed higher based on people getting excited about AI. So big push higher, new all-time highs, extremely overbought based on MACD and on price relative to the moving averages. And also the 50-day we're in the weekly time frame, the 10-week moving average relative to the 40. So overbought on multiple levels. One of the things that intrigues me in NVIDIA, if we look at the daily time frame, if, and I'm not saying it's going to happen, but if NVIDIA gaps down, back down below this formation, this will be an island reversal. Could easily be an island reversal, this formation up here, and that's not a good thing. But hadn't happened yet, so we'll keep an eye on that. Another stock, all-time high, Apple. Everybody loves Apple. Now, why anybody would pay $1,400 for a smartphone is beyond me. Doesn't seem very smart, but whatever. So again, new all-time high, very overbought based on MACD. MACD still on a buy signal. Energy very elevated. Overbought based on moving averages, 10-week relative to the 40-week. Unable to push above resistance at the upper median line of this shift pitchfork, but also apparently finding support along the median line of that same fork. So, and was able to push up above the prior high, obviously. Didn't spend much time testing that level for support, although we could make the argument that it did test that level for support and then continued higher. So that's Apple. a few more to start. Microsoft, appears to be double topping at the level of this prior high. MACD overbought, rolling over at the same level that stopped us last time. Energy still elevated. Overbought based on the moving averages. This is Amazon. And again, just point out that with the exception of Apple and Nvidia, all of these stocks are below their prior highs back in 22, late 21, early 22, depending on which vehicle you're looking at. But anyway, pushed up through resistance at the upper median lines of both this downward sloping shift fork and this upward sloping shift fork. So pushed up above those resistance levels, running into overboughtness based on MACD. Energy is elevated. Tesla bumped into resistance at this horizontal level from, it was support back here, acted as resistance here, price rolled over, potential support, back in this area from this, where we tested this level for resistance from below. That level may act as support currently, and so we'll see what it does. MACD still got a lot of room to run, currently in bull mode on a buy signal. So Tesla's got some room to run if it can break up above this resistance. Tesla's been getting some good business recently. It seems like the electric car and truck manufacturers are moving towards Tesla charging stations as being the industry standard. So currently, as I understand it, there is no standard for charging stations. And so, if you've got a Ford EV truck, you may or may not be able to charge it at a Tesla charging station. And so in just the last week or so, I've seen several articles suggesting that the manufacturers are going to adopt Tesla charging stations as a standard. Here's Facebook, Meta, bumping up into this horizontal resistance, support resistance level. MACD overbought, still on a buy signal, in bull mode. Energy is very elevated. So, Meta could move higher. It's got some overhead resistance to work through. Google, same thing, ran into resistance, rolled over. MACD overbought, rolling over. This is semiconductor index, or ETF, ran into resistance from this prior, it was support back here. Looks like it's acting as resistance here. Again, notice that we're still below the high of 2022. MACD overbought. AMD running into resistance and rolling over. Support back here, resistance currently, MACD overbought, got a little bit of a room to run. So anyway, that was what I wanted to go through in this video, focused only on stocks and sentiment, overbought, oversold, however you want to look at it. If you're swing trading in a short time frame, couple of week trades, couple of day trades, not intraday, but several days span for a trade, you might want to spend some time playing with this S&P 500 stocks above their 20-day moving average. And as I said, if you drop down to the daily time frame, you might get some more granularity for your strategy. But as always, I'm not giving investment advice. You didn't hear it from me. And I'll talk to you soon, folks.